Thank you, Mr. Chairman. Good morning. So I just want to thank you for the opportunity to be here and to present the National Cotton Council's economic outlook for U.S. and international cotton markets. And before I get started, I just also wanted to take a second to thank our economic services staff. So you see me up here giving the presentation, but a lot of work goes into this, and I greatly appreciate how much time and effort they spend in putting this outlook together. So while the presentation is going to focus on a few highlights, as always, we'll have the actual booklet outside of the room at the end of the meeting. And of course, it's about 66 pages, and I fully expect all of you to read every page because it will be stimulating. Okay, so overall, if we look at 2017, cotton prices were stronger relative to competing crops. Oil prices basically increased to the highest level since mid-2015. The world economy is improving. Increased growth is projected over the next few years. World cotton demand is increasing. The latest USDA estimate shows an increase of about 5% in world cotton consumption for 2017, which is more than double the previous 5-year average. China's stocks are declining, and USDA estimates about an 8 million bale decline in 2017. World cotton area bounced back in 2017, basically from the lows observed in 2015 and 2016. Production is estimated to be about 14% higher in the 2017 marketing year. However, due to the increased production and the large carryover stocks outside of China are projected to be the highest level on record for 2017. Okay, so take a look at the U.S. balance sheet. The most recent estimate for the U.S. harvest for 2017 is just over 21 million bales. So that's a 4 million bale increase from the 2016 crop year. The 17 crop is the largest since the 2006 marketing year and almost 6 million bales higher than the recent 5-year average. U.S. producers planted 12.6 million acres of cotton in 2017, and that was an increase of about 25% from the previous spring. We saw increases in all regions of the cotton belt, and that was primarily due to just better cotton prices relative to competing commodities. So as we look at U.S. mill use, the number for 2017 is 3.4 million bales, and that's up about 100,000 bales from 2016. U.S. mills continue to be important and consistent customers of U.S. cotton. So in the current marketing year, we began with stocks at 2.8 million bales. We add that to the recent harvest, we have total supplies of 24 million, which is more than sufficient to satisfy the estimated use of 18.4 million bales. Okay, so now let's get to why you're all really here this morning. To listen to me anyways. Okay, so we distributed the NCC Acreage Survey. We distributed it on December 15th, and it was out until mid-January. And respondents are asked to give their plantings of cotton, corn, soybeans, wheat, and other crops for 2017, and then what their intended acreage is for 2018. And once again, it's important to remember that the survey is a snapshot in time based on grower intentions, and obviously we know that a lot of things can happen between when the survey was done and then when plantings actually occur, so that's of course expected. Okay, so as always, when we look at these survey results, they're viewed as a measure of grower intentions during that survey period. And I want to kind of show you what the prices were during the survey period compared to where the prices were for January to March of each crop year. So when you look at 2018, you're looking at the December 15th, 2017 to January 15th, 2018 average prices. When you look at all the other crop years, you're looking at the January through March average. Again, because we look at prices closer to when planning decisions are made as we go out past the survey period. So as you can see, cotton prices were a little bit stronger. Corn and soybean were a little bit weaker. So we look at the ratios of cotton to corn and cotton to soybeans, and they are stronger than they were in the 2017 crop year. And we look at those ratios because if you look over a time, you can see that those ratios, this shows corn and cotton, but cotton to soybeans is the same. We can look at those ratios, and they're a very good indicator of cotton acreage over time. Okay, so now let's get into the details. We look at the Southeast. Survey results indicate a 2.3% increase in the region's upland area to 2.6 million acres. All states in this region show an increase. In Alabama, it's a real small increase, a little bit less than 1%. In Alabama, you're seeing more cotton acreage, less wheat, soybeans, and other crops. In Florida, respondents indicated more cotton and soybeans and less other crops, which is likely peanuts. In Georgia, we see a slight increase of 0.6%. Georgia growers expect to plant less soybeans, more corn, and other crops, again, likely peanuts. The largest increase is in North Carolina with an 8.2% increase. Acreage is expected to move away from soybeans in North Carolina. In South Carolina, acreage is expected to increase by 3.4% as growers plan to plant less corn and wheat and more soybeans and other crops. In Virginia, an increase of 3.1%. Virginia growers intend to plant more corn and soybeans and less wheat and other crops. Okay, looking at the well, actually, I'm not ready for that yet. Yeah, I am. Okay, looking at the Mid-South. If we look across the Mid-South, we see that the results are a little bit mixed across the states. So you'll see a decrease in Louisiana and Mississippi. And you know, as we look at the Mid-South is a bit different than some of the other regions. We know that growers have really demonstrated their ability to adjust acreage based on market signals. And in the Mid-South, growers can grow a variety of crops because of the excellent soil conditions and get high yields for a lot of crops. So as we look at the region as a whole, the decrease is just less than 1%. So we're not looking at much of a change. It's still 1.9 million acres. The largest decline, of course, was in Mississippi. Mississippi respondents expect to increase acreage of all other crops as less corn acreage is planted. In Tennessee, cotton acreage is expected to increase as land shifts away from corn and wheat. Missouri growers plan to increase cotton acres by 3.8% and plant less corn and soybeans. Louisiana expected planting 2.6 less cotton acreage, more soybeans, and less of other crops. So all states in the Mid-South except Missouri intend to plant more soybeans in 2018. Okay, now let's look at the Southwest. So in the Southwest, we are seeing an increase of 5.7% for the region as a whole. So it would go from 7.6 million acres to 8 million acres. All states are expecting an increase in cotton acreage. In Kansas, you'll see the largest increase of 55%. In Kansas, they're also planning to plant more wheat and other crops, likely sorghum. So in Oklahoma, a 21% increase in cotton acreage is expected as wheat acreage declines. And you know, you'll notice in 2017, there was a very large increase in Oklahoma acreage. So again, a further increase in 2018. In Texas, overall it's 3.7%, but if we break down the regions of Texas, you can look at South Texas, and respondents indicate about a 0.3% increase in cotton acres. The Blacklands, an increase of 8.6%. In West Texas, an increase of 4%. Okay, and in the West, producers are planning to plant 6.8% less acres of upland cotton in 2018. Acreage is expected to decline in Arizona and California and increase in New Mexico. And in Arizona, the survey suggests a shift from upland cotton to ELS cotton, corn, and other crops. In California, growers intend to plant more wheat and corn. Okay, let's look at ELS acreage. So the survey indicates that growers intend to plant a little bit more ELS cotton in 2018. Growers expect to plant 31.6% more ELS in Arizona, and overall, the acreage would be 254,000, and again, a slight increase from 2017. So we add all that together, some across the regions, we get 2018 upland area of 12.8 million acres, which is 3.8% above 2017. Overall, we add ELS into that number, and we have U.S. all cotton plantings in 2018 of 13.1 million acres. That's 3.7% higher than in 2017. So, given where the economic climate has been, it's important to discuss the factors that affect acreage decisions in 2018. Based on the current price of cotton and cottonseed, total revenue is expected to fall short of total cost. But if we look at the Southwest, cotton is still the better alternative, and a significant increase is expected in Oklahoma and Kansas. Low wheat prices, along with above-average yields in 2017, are likely also encouraging more cotton acreage in 2018. In Kansas, we've also seen a tremendous increase in acreage in 17, and another large increase is expected for 18. And Kansas has greatly benefited from the availability of dicamba and 240 varieties in this last year. In the Southeast and the Mid-South, cotton continues to be a good alternative, but some growers may actually expect higher returns from other crops. In the West, expected water availability may be influencing cotton acreage decisions. Now, planted acres is just one of the factors that will determine supplies of cotton and cottonseed. So obviously, we're going to look at weather, agronomic conditions, and various other things that will determine the actual crop size. Now, while the NCC does not actually attempt to forecast weather patterns, and our standard convention is generally to assume yields in line with historical averages and recent trends. This year, we did a little bit different with the calculation for the historical abandonment percentage, because as we look across the cotton belt right now, and as we looked across it a couple weeks ago, conditions are very dry. Conditions are abnormally dry at this time of the year across the cotton belt. Now, specifically, we look at Texas and Oklahoma, and for those abandonment percentages, we actually bumped those up a bit higher than the recent 5-year averages. And again, if dry conditions continue to persist across the cotton belt, and particularly in Texas, then the production numbers could obviously go down, because we'd be looking at potentially lower yields. So in our case, we set abandonment at just about 15% for the U.S. cotton belt, which brings us to 11 million acres of harvested area. So with an average yield of 842, we get a cotton crop of 19.4 million bales, so under the crop for 2017. Okay, and so I just wanted to, I just talked a little bit about dry conditions, so let's take a look at the recent Drought Monitor. And of course, the red is, you see the red on there, that would be the most extreme drought conditions. And then as you kind of go lighter in color, then it's less dry. But as we look at the current situation in Texas, there's been very little rainfall or snow that's fallen in West Texas or Oklahoma in the past 90 days. So right now in Texas, the lack of precipitation is actually reaching historic levels. According to the National Weather Service, February 7th was the 117th consecutive day without measurable precipitation in Amarillo, which is higher than the previous record of 75 days. In Lubbock, February 7th was the 91st consecutive day without precipitation, which is just below the 98-day record. So again, as we look at this crop year, we'll be monitoring those drought conditions very closely, because this could significantly affect production and abandonment percentages for the 18 crop year. Okay, so coming back to the U.S. balance sheet, let's first look at cotton consumed by mills. We're showing a slight increase for 2018 of 60,000 bales. U.S. exports are projected to be 14.3 million bales for 2018. And for 2017 crop year, right now we have those set at 15 million bales. Now this number right now is actually slightly higher than the USDA estimate, and USDA actually just lowered their estimate in their February report that came out a couple days ago. It was 14.8 million bales. They lowered it to 14.5 million bales. And that reduction, again, was due to the current pace of shipments as compared to sales in the current marketing year. So as we look at it, if you look at the current pace of sales right now, the actual export sales commitments could be higher than our current estimate of 15 million bales. However, the shipments are lagging behind, and the shipment percentage as compared to total sales is at the second lowest point in the last decade at this point in the marketing year. Now, earlier in the marketing year, several factors led to shipping delays. Currently, though, we're looking at trucking shortages and then the increased trucking costs that are currently impacting cotton shipments. And we heard a little bit about that in the ACP meeting yesterday. So in the USDA's report, they lowered it by 300,000 bales. And again, most of that is due to the shipment pace and the question on whether we can get those cotton bales shipped out for the end of the 2017 marketing year. We have 26 weeks remaining in the marketing year. We need to ship an average of about 375,000 bales per week for the rest of the marketing year to reach the 15 million bale estimate. In the latest export report, we had the highest sales in the marketing year. You know, we had increasing, sales. We had the highest shipments of the marketing year. We've had increasing shipments for the past few weeks, which is not really unusual. As we get into the second half of the marketing year, we always tend to ship more cotton in the second half, but it's really picked up, and you know, we're kind of watching that pace as we go into the end of the marketing year to see if we can reach that 15 million bale estimate. So as we look at the total U.S. export estimate, that breaks down into 14.4 million bales of upland and 650,000 bales of ELS. Now, the U.S. will remain the largest exporter of cotton with a market share of 39% in 2017 as compared to 40% in 2016. Now, world trade is projected to be a little bit higher in the 17 marketing year, but we're also expecting some increased competition from other major cotton exporting countries. And again, that will lead to a slight decline in the U.S. market share. Okay, so no cotton economic presentation is complete if we don't talk about China for a little bit. So the USDA is projecting demand growth in all major cotton consuming countries. And in 2018, we're seeing an increase based on the USDA estimates of about 1.8 million bales in China. So as we look at China, USDA had actually projected a slight increase in China's cotton imports for the 17 crop year earlier in the marketing year. But in the January 2018 USDA report, they actually lowered it because there's been a significant increase in the estimate for China's production for the 2017 crop year. And that's mostly to a large increase in acreage as compared to 2016. So as we look ahead, China's acreage is actually, we expect it to remain fairly stable. We're not expecting large increases in acreage out as we look into the next few years. Now, China's consumption has been increasing over the past 3 years, but the use still remains well below the historic levels that China had previously had. So as we look at continued growth in world cotton demand, it still remains a concern because we still have competition from lower-priced man-made fibers that continue to weigh on the market. Now, while internal cotton prices in China are still strong relative to polyester prices, we have actually seen an increase in polyester prices in 2017. And they're currently at the highest level since 2014. So as we continue to see oil prices go up this crop year, we may see a further increase in polyester prices as well, which again can help the cotton industry. Another factor affecting cotton versus polyester is that China has some new environmentally friendly policies in place, and that could definitely impact man-made fiber production and use in 2018. Now, China is expected to continue to limit import quotas in the 2017 crop year as they continue to work through their reserve stocks. But for 2018, a slight increase in China's acreage is expected, so you can see, I don't see acreage up there, but it actually leads to a little bit lower production because we lowered the yield a little bit. China had a record yield projected for the 2000 crop year by USDA. China's consumption is expected to increase in the 2018 crop year, so we see a slight increase in mill use from 40 to almost 42 million bales. Okay, so let's talk about China's ending stocks. That's always been the key topic that we've been following for now too many years to count. So China is going to begin their next round of reserve auctions on March 6th, so just a few weeks. China sold almost 15 million bales from the reserves in the 2017 crop year. And right now, another successful auction series is anticipated for the 2018 crop year. So China plans to gradually reduce stocks each year to what they consider a reasonable level. Now, as we look at historical stock levels in China, you can see that average ending stocks were about 20 million bales prior to the buildup in 2011. So another successful auction series in 2018 could easily put China back in the market to be a larger importer again. And again, for 2018, another 10 million bale reduction in stocks is expected, which would reduce China's stocks to 29 million bales. Again, great news for us, and the reason I wanted to point this out is that China's stocks don't have to get down to a really low level. They generally hold a higher level of stocks than other countries. Okay, so looking at the China balance sheet, you can see that what we're going to run into starting with the 2009 crop years, you see the little bar up there that says decline in stocks, that little brownish, tannish colored bar. Once they work their reserves, that bar right there is going to have to be filled with imports. And right now we're estimating a gap between China's consumption and production that's about 15 million bales, and that will need to be filled by imports once the reserves are reduced. So we're getting very close to a position where that can happen again. Now, I want to talk for just a few minutes about India as well. So India recently announced a change to the minimum price support policy for the 2018 crop year. They plan to set the MSP price equal to 150% of the cost of production. Yes, that is 150% of the cost of production, which is a significant increase over the current level. An increase in the MSP price can have significant implications. I can't get that out. I was still so baffled by 150% for both domestic and international cotton trade. So the MSP basically acts as a price floor, which could reduce the competitiveness of India cotton and could lower India's exports, which again is good news for U.S. cotton. Higher internal prices could also lead to increased imports in India because the price of cotton inside of India may be too expensive for India's spinners to purchase. So again, all in all, could see a significant change in the export trade. So as we look at the world balance sheet, we see USDA's latest estimate shows a 5% increase in consumption for 2017, and as we look at 2018, we see another increase from 121 million bales basically to about 125 million bales. Now for the world balance sheet, we see global production of 119 million, so it's a little bit lower than we had in 2017. This leads to a reduction in world stocks of 5.4 million bales in the 2018 marketing year. Now, the one thing I do want to highlight today is while projections of global consumption exceeding production would normally be supportive of prices, the implications for this year are not quite as clear-cut. So the decline in global stocks is due to reduced inventories in China. Stocks outside of China are actually projected to increase by 4.6 million bales. And I guess the other thing let's point out for a second, you can see in that graph, that would be basically a record level. Record level meaning stocks outside of China. So as we look at world cotton trade, we're seeing a slight increase for 2018. We look at a little bit lower U.S. exports. We see U.S. trade share actually declines to 36.7%. Again, all of that depends on our assumptions right now based on current conditions across the global market. If we see some changes in India that could affect their exports, we could definitely pick up some more export share. Okay, so while the Council's economic outlook does not generally attempt to project cotton prices, we just want to review some of the factors impacting the current price situation. So cotton prices have maintained a stronger appearance since October 2017, despite the increase in world production and the resulting increase in ending stocks. While the current supply and demand fundamentals would generally translate into downward pressure on prices, this hasn't been the case for the last few months. Strong demand for U.S. exports, weaker U.S. dollar, heavy speculative buying, and large mill fixations have been supporting prices. The current price environment could also suggest that stocks may be smaller than the current estimates, and maybe an additional revision is necessary in the world balance sheet. So for the coming year, projections of record ending stocks could definitely put pressure on prices. So just to wrap it up, based on these assumptions, The increased stocks outside of China obviously contribute to a more bearish tone for prices in 2018. We'll be watching the U.S. export pace. We'll be looking at China's potential reentry as a large importer at some point in the 2018 marketing year, India's price support policies, and then, of course, mill use in the current macroeconomic environment. So 2018 is definitely shaping up to be an interesting year. We have improving world economy, we have growth in world cotton demand. And we're going to have to talk about one more thing for a second here. Okay, so we also have the seed cotton program that's going to be in place for the 2018 crop year. And I'm not going to go into a lot of details here, but I just want to quickly go over the reference price is set at 36.7 cents per pound. The seed cotton price, it's a weighted average of lint and cotton seed prices, and basically, if you want to get technical, it's also lint and cotton seed production, but I just wanted to be simple here for a second. Producers will have the option to update payment yields, similar to what you had the option to do in the 14 Farm Bill. Establishing base acreage, you'll have the option to convert generic base to seed cotton base based on the higher of 80% of generic or 09 to 12 planted cotton acres, or reallocate all generic base to seed cotton and other commodity bases according to the shares of 2009 to 2012 plantings. Now, the NCC Education Program, we're ready to kick this off. We're all really excited about it. I know you are too. We're going to launch an education process beginning with webinars on February 19th and 20th, and we'll provide more information on those webinars later throughout the meeting in the next week. And that's all I have, so thank you very much.